Yo, what is good, High TF Mob? Welcome back to the channel. I just wanted to do a brief overview of my main pairs, and then also I wanted to break down um, GU for you guys, just so I can kind of show you guys one more time how my strategy goes and how I look at things again. So right now it is 6:03 in the morning. It is the second day of the month, May 2nd. In the market, if anyone has traded or has trade experience, you will know that the market is actually a day ahead. So right now, it's Monday in real life, but in the market, it's Tuesday. So right now, what I usually look for is the daily open at this time, because the daily open, which would be this candle open, right? It'll tell me what the move of what the initial move of the market is, and then based off how it reacts around it, will tell me whether I should be looking for buys or sells for the day, moving into the week. And again, this is all like a puzzle. So we're gonna start from the top down. We're gonna start with the monthly. Our new candle from the monthly open, and we'll start with AU because that was what I was breaking down last video. So all my lines are the same. I didn't touch anything as far as what we had set up. And now it's just a game of watching, right? So the week starts right now. We are at this low level price on the monthly. Looks like it wants to start by moving up, right? So what we could probably see in the beginning of the month of the candle is a nice rise up against this candle, and then probably some reaction around the halfway point, or you know, I know people know about Fibonacci retracements, so this would probably be a good time to look at a fib retracement coming from this high to this low, and just looking for that sweet spot of when you want to get in. But now, if I drop to the weekly candle open up, looks like it's buying again. Buying up from my swing low. I go down to the daily. The daily's pulling back up. And now let's drop to the 4 hour. Price looks like a bullish engulfing. So yeah, we could see price make a retrace. Mind you, before my swing high, actually, this was one of the only changes. Before, my swing high was here and my swing low was down here. But notice price broke through yesterday night, and bluffed. Everybody probably could have gotten faked out with sells here. So price bluffed itself. It broke the low. Yeah, it closed below. So it's making this now the new official swing high, and now we're getting that retracement moving into this morning. Now what I meant by looking for the daily open is this is something Real Rise Academy teaches more in depth, but what the daily open is essentially a simple way for you to mark the daily candle of the day and be able to determine whether that candle is going to buy or sell within the day. So this is what I put right here. And the reason why I'm putting it at 0 is because it's at 12. The daily candle generally opens at 12, if I'm not mistaken. And what happens is, since I know price is moving up first, um, ideally this would be like the quote unquote pullback of our daily candle. If I move back up, right? And the reason why I'm putting it at the actually I should put it down here. So the daily open will be here, because this candle at 0 or at 12 on the market um opened down here, went down first, tested this low, couldn't break it, went up, and pulled back a little bit, closed. So this is our daily open area, and this will correlate exactly with your daily candle. Okay. So you would have known, you could have bought knowing that it did go a little bit below, and then once it closed back above, it went back above. So later on, if you're looking for your move to continue to the TP1 on the downside, you'll be looking for a double top rejection anywhere on this 1 hour, 15 minute, right? You're going to look for some type of rejection when price is going up against this movement. Okay. Now, my fib retracement is totally different. Um, I can go more in depth as far as what it represents. But again, the academy teaches it, and I don't want to give out all of their knowledge, all their information, because it is stuff that I've paid for and stuff that if you guys are willing to figure out details to, again, you guys can reach out to me and we can get connected on that basis. So as far as the daily open, I'm looking for a rejection around this 50% mark. And I will be looking for that continuation down to the weekly. So I'm personally, I personally want to play it patient. I don't want to get too overly antsy about moves I'm seeing. Yeah, I could finish taking this buy up. That's not a problem. If it looks like a clean setup, which it kind of does. You have price broke through this high. So here, I'll just show you structure because people need to be able to understand market structure and how it can work on multiple frames. So we have a low here. Price came, broke this high. Okay. Once the high was broken, price came back, tested it, broke this high here. And now price is coming back down and it's trying to test previous high. Which only telling me we might make another push up because of how price is throwing wicks at the low. Okay. So that's just the structure I'm seeing. That's what the pace of the move is starting the week off. And remember, I mentioned generally Sunday, you want to leave things alone because you want to play spectator. You want to watch. Because a lot of what you're trying to do again is you're trying to line up when to get into this move. Okay. So you don't want to get in too early. You don't want to be too greedy. Just try to pace yourself so that now if you move up and you know this candle already had huge sales around the 50% mark, you may see some reaction that makes sense to you. And you can then use the 4 hour to time that entry because again, the 4 hour is going to give you a more stronger confirmation to those higher time frames. So this is a strong bullish confirmation for that daily candle because price went down and then it got rejected and almost engulfed. It didn't fully engulf. So that's also a sign. It may not be as strong trying to go up. Um, moving on to my next frame, AJ, another chart. So we'll start from the top down again. Just again, all my lines are there. I don't really got to touch much. I'm just playing the spectator sport Sunday. So we have our weekly low here, weekly high here, where this wick of price went. Okay. We have our TPs, 1, 2, and 3, TP 1, 2, and 3. We also noticed that the monthly candle opened and couldn't really go down. So it's trying to make its way up, struggling to fight its way up, but it's trying to go up first. And it would make sense that this month would try to stay bullish, maybe the entire month, maybe the beginning of the month, and then a rejection towards the end of the month. But right now, I would assume it's going to try to stay bullish, try to fill this wick and fall, or it could just come up and then fail around the middle of the month, or it could just pop off with just a sell. We just don't know. So we just gotta give it that time. But right now, the way the candle's looking is it looks like it wants to rise. So we'll move down to the weekly. The weekly looks like it wants to rise a little bit, but again, because we have this bearish movement, price may just be coming. The weekly candle may be just coming against this candle a little bit to complete the rest of the structure for the week. Okay, so now I can drop to the daily, and what we see here is my take profits on the downside. We also see that price broke structure. So we had a low here. It came and made this high. The high got wiped out right here. Price is coming back up to test it. So now I can assume by completing the puzzle, we're going to see price trail back down. So in this temporary time, this daily open for me matters to watch because again, it's a line that just tells me how this candle itself is going to behave. And then from 1 hour and 15, I can have a more firm description of how things want to play out. So here on my, on a second, let's go back. Oh yeah, actually we'll stay right here. So here on my 1 hour, you can see I have my swing high, I have my swing low here. Okay. I marked this as my flip zone because my old swing high was right here that caused this low to break, which is my old swing low. Okay. And once that got broken, this became the new swing low. But then from this low, this high was broken, which makes this whole area a potential flip zone. But again, ITF mob, we stick with the high frames. We try to play along with the high frames. So for me, seeing that this is a flip zone, it's a less believable flip zone only because of the simple fact of we're looking at the high frame pattern. We're looking at the high frame puzzle piece, right? So it definitely could still buy because it came and tapped these pools. So it could buy up and wipe out one more swing high. And then that could be, this could be another, that could be your new swing high before the actual drop. Or it could just continue up to your other TPs. So if price starts to make the patterns, you could buy from here to here. And then if it doesn't break it, then you know you can take it back down to here. Okay, so it's chess, not checkers. You don't want to be too overly antsy. Again, you don't have to get in every move. You just have to find what makes sense at the time. So again, we're gonna mark our daily open. And mind you, these lines are also session breakers. So one line to the next completes a day worth of movement. So you'll see it's just segmented. So this is our new day now. And what I like to look for again is that 0 daily open. So right here, and I line it up with the candle that's on it. So it'll be this one right here. And then it's a bullish candle. So my open would have been right here. Okay. So this is my daily open. And again, you get the motions, right? So price could come up. You could throw some structure here, come down, wipe this out, give you a test and make a move down. And that would be a good example of what we're looking for is we want to see a fake out, right? So if the daily opens, generally, I'm going to show you something. It's going to throw a fake move because that's just how candles form, okay? This is why psychology is hard for people to grasp in trading because you're not realizing if a daily candle opens, it doesn't necessarily start off with where it needs to go. So you'll see right here, every time a candle opened on the daily, it went up against first, whatever the outlook was, goes up against it to fake out people. Then by the end of the day, they're down in the favor of where we're going. Again, they'll do it again. They'll throw a little fake and then they'll go down and then they'll close. They'll do it again, throw a fake, go down and close. They'll do it again, throw a fake, go down and close by the end of the day. So these are cycles of how it moved. So here, price open, it went down a little bit first, then it went up, and then it closed. Here, went down a little bit, up, and then it closed. And mind you, this is all while it's trying to make its move up. So now we have this where it went up, it couldn't break it, and now it ended up closing down bearish against this previous bullish candle, which is now insinuating we have momentum to the downside, which means on the lower frame, I can get involved once I see the proper signal to get involved. So whether that be a bear flag, some nice consolidation on the 4-hour, which we'll probably be seeing, right? So I would like to do it this way. As a matter of fact, hold on. Right, this could be a potential flip zone. Again, it's not likely, but that's why we are a high TF mod. We all care about the high time frame. That's all we want to keep an eye on. I use the low frames for scalping if I see the right opportunity. So here, well, we might see some consolidation. So prices, consolidation just means prices are moving sideways. It just sounds all fancy, but bro, it's just moving sideways. Nothing crazy. Okay. So we probably will just see some bouncing around. Then we'll go down to the 1-hour. And we'll be looking for, there's also more specifics I'll be looking for. As far as order blocks, people, if you're familiar with order blocks, you'll know where you're really supposed to look to find those. That again, I'll be going in depth on my lives and things like that. But for now, I'm just going to mark them briefly so I know where my points of interest are. I honestly might even go over them in another video just so people can get a more clarity on how it works. But this would be an order block up here. And see something. Yeah, if price go up, price Okay, so this is another point of interest for me. It's very subtle, but this is another point of interest. And that's why price is looking bearish still. It's still an area where we can see reaction. So if price breaks above this, then we know the next point for me to look for a sell would be right up here to take to the downside, so on and so forth. So in the meantime, you could play it safe and wait for price to fall back where the daily open line is, and then you can get involved, or you can be eager and just trust whatever you're seeing and take a sell. So usually I don't make my decisions until around New York session, until around 9 o'clock. So at 9 is when I'd be looking to pull the trigger, because that's when the volume kicks in. So again, another added confluence to all this nonsense is adding your EMAs, right? So here you can even see one of my EMAs, my 8 and 14 are looking like they want to cross for a buy up to my 200. So we might get the tap around here, sell down. So it's just ways to know like when and when not to pull the trigger. So having all this added confluence helps. I don't see enough volume. So these red, notice this huge ass bearish candle, right? Look at this. Amount of volume put into that made it look like this, which means a lot of people press sell once they were at this level. Okay, that's all that means. So now here at 9 o'clock, if I'm seeing this peak again at red or blue, telling me which way it wants to go. It's telling me how many people are betting on a specific bias at that time. Again, 9 o'clock, everybody's involved. So at least by 9. So now if I go to my session breaker, I do use a session breaker. I can definitely go through a video of my indicators for everybody, because I use the session breaker to help me figure out the weekly separation. So last week we started up by a buy, we sold into the middle of the week, then we got a reversal at Wednesday, around Wednesday of last week, your midweek reversal. And then now we're moving into this week with consolidation, which could tell me we could pop off with the sell and then probably get another pull up and then another push down. It just depends on how the market wants to move. And you also do have your session blocks here. So if you wanted to go down to your 15-minute for more detail of what happened in the London session, we see here, it's just been consolidating through Asia and London. So yeah, you could have bought at your lows and highs of these boxes and, bought and sold and whatnot. But again, for me, if I'm on the 15, I like this real rise block setup. I like that. As far as I like this point of interest is what I'm getting at. They call these real rise blocks in the Real Rise Academy. They're also institutional blocks, and then you'll learn about mitigation as well in the academy. There's also videos out there for mitigation, so it's not like it's under the rug, but it's information I don't know if they want me sharing without people being signed up. So for now, that's just what I would see. But again, like the 4 hour doesn't look aligned to that. And this is what I meant by you have to complete the puzzle, right? Because when you're trading, okay, check this out. So when you're trading, right, let's say this is our 4 hour now, right? So this means this candle open at, here, let's take this off for now. So this candle open at 4 o'clock in the morning, right? So we know the next one will open at 8 o'clock in the morning. And the next one would really tell us where from 8 o'clock to 12 o'clock, the market should be heading. Because the reason why is, remember I showed you price starts with the fake move, okay? And then it'll make the official look, like it'll make the official about 2 hours into that candle. So if I see a 4 hour open and it opens going up first and can't break this high, I know now I can go down on that 1 hour, and at least by 12 o'clock, we should be seeing motion to the downside. The reason why that's important for me as a trader I am is because I love to move my stops to break even when I can, as soon as I can, because If you move it to break even, again, like I was telling you earlier, you can get stopped out of your move, not lose any money, and still be able to find a clean setup into the same move later. So your position is always more valuable than you trying to get in early. Always more valuable because it will directly affect what you're thinking as that trade is playing out. If I got in now, I'd be kind of gambling at that point because there's nothing certain telling me we're either going down or up. I only know that we're just channeling, we're just moving sideways. And honestly, people would probably be betting on a buy more than a sell just in this circumstance because price looks oversold. And again, if I pull up my RSI, I use a stochastic RSI and a regular one, but for some reason my stochastic one's not here. So I think I might have deleted it off for the sessions. But let me check some. I just want to be sure. Okay, yeah, that was why. So yeah, um, I just want to check out this then. Okay, so yeah, this is my stochastic RSI. So stochastic, what it's good for is when price is out of bounds, basically, we're looking for price to fall back inbounds to get involved. Okay. So you'll notice whenever price goes oversold, we're looking for buys because price is going to pull back up. And you can see where when it lines up to the candle, we did have a strong buy. Same deal here. Price was overbought, so we had a strong sell down. So what are we at right now? We're oversold. Do we want to really get involved with that sell? Not really, because again, it's the beginning of the week. It's still fresh. So that's just what I'm looking at for that. Again, we have a consolidation zone here, and we have our swing low here. So money's left behind here. Money's actually left behind up here too now because he had this huge pool of money that was wiped out. And they're still trying to respect the structure that we see. So once they decide let's break through, they're still kind of respecting that little uptrend nonsense right now. But we'll see what the deal is later. Okay. That nonsense, but it's factual. So you should be using your market structure. So now next frame, going on to UJ. Oof, that looks real nice. I actually would look to sell this now. But and a big reason is because again, we're kind of coming from that oversold zone and we got that little retest with the candle crossing or with the EMAs crossing, not even EMAs, but the lines crossing back over my stochastic. If I go back up to the monthly, okay, we're super overbought. Just ridiculous. We're overbought on UJ. UJ actually broke its all-time highs at the 128 level. So what I ended up doing was I marked my weekly low, my peak weekly low. I marked my peak weekly high here. I did a flat level 113 and I did a flat level 131. I marked my daily, or excuse me, oh, we'll pay attention to candles too. So on our monthly, the candle started by trying to make an upwards move and it looks like it's gassing out. If I go down to the weekly, we have another wick. So price started off down, try to go up last night, and it's still trying to like pull back a little bit. And now we can drop to the daily. And mind you, the map is still there. You have your weekly high, weekly low, you have your daily, you have your TP1, 2, 3, right? So now here you see the daily candle made a move up and is trying to make a move down now, which may come at least near this TP1 or at least halfway of. And then we'll probably get a new reaction. Okay. So I can drop down again to my 4-hour and you can see now the 4-hour candle lines up, right? If I'm putting the puzzle piece together, I see this bearish engulfing. This looks like a nice setup to take, right? So for me, we're at a high here. This is a low. This is your lower high now. Also, I had another institutional block here, which is another point of interest. And the institutional block you also see lines up with their wick. So I'm gonna drop to the hourly and you'll see there institutional block or a real rise block, whatever you want to call it. And now you'll see price came near that and it did wipe out this pool of liquidity here. They grabbed their money they left behind here. They left a wick, so they got involved. And now here we can see price is kind of trailing back up. So if you drop to your, actually, let's not go down 15 yet. I don't like to touch the 15 until I mark my daily open. So now things are more clear for me. So boom, the daily open, 0. So this candle is a bullish candle, so it opened on the bottom of it. And if you know anything about candles, you know that when a candle is bullish, we'll just mark this first, the daily open. So when the market opened, it went up first, couldn't really do much, and then now we had that push down. So if price decides to pull back up on the 15-minute, I would be looking for a point of interest to be selling. Okay. So it would probably be, okay, I'm gonna look at this as my point of interest. And also, hold on a second here. I do want to mark one more thing I almost forgot to do. So this is our swing low, this is our swing high. We have a new point of interest here where we should see a new price reaction to continue selling down. And if it doesn't, it could just be that they're coming to fill this money they left behind before trying to keep rallying higher. Um, so again, this is all chess, not checkers. It's about you being able to read the price. But again, if I'm looking at this from a 4-hour standpoint, the 4-hour is our bread and butter. The 4-hour is the middle point that aligns with your daily down to the low frames. Your low frame is just deciphering what the 4-hour candle is doing. And again, getting it involved at 8 makes the most sense because you're going to be able to avoid the spreads that happen when the market opens, and you'll be able to get a new candle that can give clear motion in the time that volume should pick up, which would be 9 o'clock. Again, this academy is very strict about trading at 9. Sometimes I might trade outside of those hours just because I can see a move that maybe they aren't around for, or they again are just sticking to a trade plan. So for me, I just use my experience and kind of go off that. So from my experience, this would be a nice bearish setup where I would see this and I sell down. Okay. This would be a nice bearish setup. You could even take it down to your TP1, truly trust price to flow that far. And if you're okay with waiting again, but now the trick here again, like I was saying, is using your time to fix a puzzle. So we're going to get another 4-hour candle. This can only really go so far before that next one opens up and makes that fake move and then should align with what's going on here. So at 8 o'clock, this could be on the downside. This could be actually up even higher, right? And showing us a wick that it never broke here and could be trying to push up here for the next 8 hours. We don't know. So at 8 o'clock again, I would be looking at the candle, looking for how it makes its move up. And if it's rejecting this high or this high, I'll be looking to get into that candle going down. So an example, it looks something like this. Say it does open, right? And price makes that move up. On a second. The price closes, it opens here. Price will make that move up. It'll probably throw a wick first, and then you'll probably get some like motion of it closing. I get like a motion of closing down here to tell me it's bearish, and that's a whole circle. I'm trying to use the brush for this. A little rectangle. I have a whole different setting for it. Never mind. All right, well, you get the gist, right? And again, it could complete the puzzle. And then if you miss this move, you can then look back at next 4 hours to get in on that wick that may continue down. Okay. And notice there's always that little pullback up too when the candles finish. That plays a big factor in why Friday we don't get involved with the market. Because if you're looking at a weekly candle, it takes 7 days for it to print itself. And you always have that tail end of it of like, yeah, people made this huge buy up. If you're smart, you got out where it peaked because you would have known Thursday, Friday, they were going to probably reverse very heavily. So your sweet spot in the market to get out really would be like Wednesday. Um, so here I'm gonna go down to 4 hour again, go down to the 1 hour, and I want to see a nice clear 1 hour setup. So in about in about one, two, so in about four more candles, I'll be looking to get involved. Four more 1 hour candles. See, and this is how I use time for entries. So that's how that would work. And then if it did come there and I seen a clear, blatant signal, I can tighten up my stop loss and I can take it down to my next point of interest for the institutional level because price was pushed up here and it caused a break here, which caused this to be an area of interest for me. And again, I'll be taking it down to that. So that would be a 6-to-1, 7-to-1 setup. And if price wants to react here, I know it's only because the big frame wants to make that move back up. So now we're going to go down to DJ. It's another pair. Go up to the monthly here. Okay. So on the monthly, we see our candle. The candle looks like it started by trying to make a move, small, very small move down, and then moved up, and now it's kind of deflating. We see the two wicks here. So price, it's bullish overall, right? But at the same time, it was gassing out, losing some momentum. So this month, we could probably assume that we'll be moving a little bit sideways and then have a sporadic move up to continue up to our weekly high here. Um, and a big reason for that is because the same way we saw UJ smash through every single high, they still got to grab money back up here from these guys who bought or who sold down, who got involved with the market. Okay, so all these are areas of interest. Remember, price left here, never came back. Left here, never came back. Left here, and never came back. Anytime that happens, big institutions did that to make money. That's just what it is. Simple as that. I'm gonna drop to the weekly. Okay. Remember, with the weekly, we're gonna get our fake move. And with that, I noticed about DJ on the weekly was that if you look at this candle from last week, this last candle looked like it was grabbing money before they would be able to go up because they have to pump everybody out. So yeah, they made a move here to push up. They made money off that. And then at the same time that this move to push up happened, they probably had sell orders. Well, they most likely had sell orders in here because it was price moving sideways for a little bit for that push. And with what's happening now is they're coming back to that area to wipe out most buyers, right? Because a lot of buyers will trail their stop up. So they took out a lot of buyers, collected a lot of contracts, and also collected, closed out their sell positions that they may have had anywhere in this area. So now that they can take this market and continue up, and it would make sense because now they can make money off that. So for me, I'm looking at this weekly as the bluff. The bluff that's showing right now is a little push up. But the real bluff could be to the downside and then a real push back up. So if I drop to the daily, it's kind of showing that because here we see price had the bearish movement. It wicked off of our weekly low at a bank level. Remember, I said banks are lazy about what levels they're looking at. They have quarter levels, they have mid levels. I didn't get into all that so that I didn't confuse anybody. But I kept it simple as bank levels because really those are your points of interest on the week. So here price bought from it, and then you see price maybe consolidating on the daily. So it's indecisive, right? They don't know which way they want to take it. And in the meantime, right now, where the current swing high is, which is right here, price looked like it broke through. So we would consider this your swing high, your swing low, because price left from here caused this break at this high, and now you have the situation. So price, the institutional block I see is right down here. So if price were to break out this range to the downside, I could see it drop to here before the next reaction up, or price can keep going sideways. You have it when, mind you, institutions have enough money to be buying or to be selling and buying. So they'll be in here. They'll be in all of this. Okay. Until they wipe it one way. But when they go one way, they got to go back the other. Okay. So if let's say they bought, all these selling points will be negative for them. Okay. They'll be negative. So this is why the first move is not the best move, because what they'll do is they'll come back, close all of these out. Okay, they'll close it out. So hold up. Close all these positions, and then they'll take it up. Okay, so now they're in positive with all of this. All this is money made. All these points are money made right here. So now they're taking that, and we would want to get in here, or vice versa. They wiped out this, they'll come back, try to close their positions on the buyer side, so they're not in the negative, and they'll take it down. Okay, so this is why I have a neutral bias whenever I trade. Does that make sense? So I'm playing chess, not checkers. It's not about trying to be right every move. It's literally about finding a good risk or reward whenever you're getting involved with the market. So again, we have pools of liquidity back here. I've already marked that. There's pools of liquidity here. Yeah, you could also mark this whole top piece here. Definitely do that. Not a problem. That's also money left behind, but I like to keep it focal to the 1 hour. So that's like more of a 4 hour pool of money, and the 1 hour is just kind of like right here, wiped out, whatever. And they have another one here. So yep, that's that for GJ. And then we'll do a last breakdown for GU for the week. These are my main pairs. These blue pairs are my main pairs. All I watch. Okay. And I get involved with them at certain times. So I could get involved with GU going into New York session. I can get involved with UJ going into New York session. I can get involved with Australian US dollar going into New York session because it all involves the US dollar. Great Britain pound JPY is more of a London session pair. And anything with Japanese yen and Australian dollar, I can get involved with at Asia session. Okay. So here is GU. We'll do a breakdown one more time to show you guys, and then I am done with the video. But yeah, honestly, I hope this does make sense as to how people make this possible. Because like it seems impossible, but you have to really study enough to make it make sense. And when it does make sense, you'll see the same stuff happen over and over and over. Like it's not new. It's almost like if you play basketball, you know you can't make every shot. There's the only shooter close to making every shot is Curry. Here we see that dang near broke the game. So, but it's still cold. Like the fact that that's happening. So that's our peak high. We got our low. At, I want to put this at 124 flat. Keep it lazy, right? Because it's the big frames. Like we don't want to. We're really like, yeah, if you're experienced seasoned trader, you'll know why you're holding. You'll know why to stay away from looking at the market. You'll put your phone down for the week and then look back late. So got that. Let me check the monthly candle. So the monthly candle, again, we're starting down here. So again, we could always get that pullback and then the push down. Overall, price has been selling, but this could be the last, this could be like the final point before we get a strong push up. Okay. And if you know anything about harmonics, you could always implement that too. Harmonics always work. can incorporate it, but you know, that's just up to the person. It's up to how you want to personalize it. Yeah. I'm just showing you the core of how I look at things. Okay, so the weekly, now we're seeing on the daily here, we have a rejection at this below. The price got ate up. If I go here, I'm gonna mark my TPs going up first because see here, TP1 right here, and TP3 up here. I like to keep it focal again, because that's a lot of movement. Like you got to think it's a lot of movement, especially if I'm marking that type of space on the daily. So outside of the daily low, outside of the relative current daily low, right around here, T1, here will be T2. And we know now if like we're not coming down here, we can let that rock real. There's no point to get involved. And what I mean by that is if price starts going away from here, there's a very high chance we're never coming back for these lows. Um, but it's no guarantees. So this is why, again, I mark it both ways. It's so easy to formulate a bias and think the market can only go one. So that's why we like to look at both. That's what we do in high TF mob. Now those are my areas of points of interest. Now I go down to the 4-hour. Okay. This is where we line up everything. Okay, so we got our space. I'm looking at it. Okay, it's easy for me to see this. It's harder for others. But a lot of what I like to do is just kind of look at what's going up last before down. This is going up last, going up last. Okay, and the way that will look, just mark those peak points of when it went up. Okay. Okay. So look a little something like that, right? Yeah, the ranging and then the price wiped out. The ranging, then price wiped out. Now we're back in these pools of liquidity, money. Money's left behind. Anytime market goes one way, they're leaving money the other way. You gotta come back for it. Okay. So here we go. Drop to the 1 hour and make it clear and concise. All right, bow. So we got a swing high right here. Okay. Because this was the last high where this low was broken. Swing high. Okay, and I can pull this. I like to pull this line across because now I'll know when to switch it to a flip zone. And that's just in the case right now that price is almost like trapped. If I actually look at that, price broke too. So this kind of is a flip zone. Because right here, very, very detailed, but yeah, you can see it when you put your lines up. You can use your dotted lines to match it so you know this is straight. See how my dotted lines flushes? So I know that's straight and I know it broke right here, right? So price is pulling back and this is a big reason why it's respecting this low. Okay. But at the same time, this is now your swing low. So notice how I'm just trapping price as much as possible. So it's so detailed. So where whenever it moves, I kind of have triggers. You can set alerts on these lines too. If you're more versed in what's going on. You always set alerts at your lines and then figure out what's going on. So right here, mark this as a liquidity zone. Okay. Remember, price usually likes a double bottom, triple bottom, and the whole time all it's doing is creating bear and bull flags, or just consolidation zones. And again, now we can look to our left. We know they wiped out this liquidity here. Okay. As far as coming back, all money left behind. Took it. They took it on the way back. We're gonna do the same thing coming up here. It's a nice bear flag right here. Right. So like I don't always do the liquidity pools, but if you're new, it will help you have targets because again, this is what we're aiming for. As an institution, we're deliberately going after this money because it's left behind. So if you're trading like institutions, this is what we're going for. Okay. And this type of move can play out within the day. You feel me? Because remember, I told you these lines that are breaking apart charts. So a full 24 hours, 24 hours, 24 hours. And this is why I say it's like putting together a puzzle. So I know now on my 4 hour, again, 8 o'clock, when we're going to deal with this, right? So this is a perfect example of like what I would get involved with at around 8, a little bit after 8, because this candle will probably close going down. And that next candle, the next candle could open, go down, and then not break the low. And then at 2 hours into that 4 hour candle, I know now look for a 1 hour confirmation. And if it matches a buy signal, I can take that comfortably and ride it up to this next liquidity pool. And again, if you're feeling if you feel like from this point to a take profit, it makes sense to hold it because it's lining up with all of the rest, feel free. Feel free and play patient. At that point, again, move your stops to break even and hold it. But because of all this momentum coming down the weekly, I would assume it's not going to come up all the way. It might make a couple hiccups trying to make that reverse. So we'll see. But that's the last chart for me. Last thing I'm breaking down. And I really hope y'all are enjoying the content. If you guys have any feedback, most definitely let me know. Um, and again, hold on, let's go back to the 4 hour because this is what I see as a potential buy, and it makes sense because it lines up with what the week's motions are. But this could always, don't forget, could always be the other way, right? It could always be the other way. Price could feel like it wants to respect, and honestly, this level is not really broken on the 4 hour. You could see it's rejected. On the 1 hour, it's considered broken. So again, all that minute detail I like to look for on the 1 hour that I can have a better clarity as to what should be happening with the bigger frames. So the break shows on the 1 hour. It almost shows as a rejection too, because it's like it closed above barely, very, very barely. So that's why if it does drop, you already have targets on the other way. Then you can literally take a similar move. So again, we wait to react. This is why you can have two biases at one time. Because now if you read candles, okay, you always have a chance to make money. But that's all for today. I hope you guys, again, enjoy the content. There's so much more stuff that I do know. So I'm hoping that later on I can get around to it, but I just want to keep the foundation simple and repetitive so that over time, once you guys get a hang of it, I can start to give more detail to what can be added on to this information, so on and so forth. So I'm gonna mark this as my institutional block order. Okay. So this is an area of interest for a sell actually, if we're going with the trend still. Yeah. Price is back at it, and then you could triple top, you come back down here. But again, all that we like to match. We like to match. We like to match. So the daily itself, candle itself, right? Almost forgot. Let's mark the daily open. Okay. And just notice how quick I was able to kind of go through and just kind of break that down. So here we have sell. Okay. So our market opened up. It went down first, up. We get another bounce here. Again, that's more reason why we're coming up for this target. And then you have a nice clean setup using your 15-minute chart, because now you know why that buy is valid. You know that the daily opened downwards first, went up, coming back again, and then it respects. Okay, cool. At that point, we know the daily wick, we know the tail of that candle, and I'm going to show you right now, right here. See how that works? I'm back up on the daily. Like I said, markets are like a Russian doll. If you're good at puzzles, this is the market for you. You can probably figure it out. Right here, this is the tail of it. If price holds up, we'll see it carry on. And you know, as a confirmation, everybody is, as retail traders know, this is the bullish engulfing. So this is how we use the weight of the high frame. This is why we high TF mob. Use the weight of the high frame to find moves just like this. And you look at that. That's a 1 to 10. That is a 1 to 10 move. Okay. So patience is key. Again, using the time is your entries. And that's all it is to it. So thank you guys for coming through. I hope you guys did enjoy the content. Um, Please like, share, comment, subscribe. And again, if you guys want to follow me more closely, always feel free to sign up or show up to the academy links that I'll put in the description. And never be hesitant on reaching out for anything, because I'm just trying to work on like communicating with people, and again, just kind of being a guide for people that don't believe this is possible. I put a lot of time into this, and I've had, like I said, I've had a very up and down journey, but this information I'm using right here that you're seeing on the screen is what I got from the academy to allow me to feel the breakthrough coming. So most definitely just let me know what the deal is, and we'll move from there. But again, you guys have a great day. Thank you for watching.